Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for Thursday, October 30th, 2025. Well, totally different feeling after earnings or during earnings, as I'm doing this actually before dinner for a change. And I asked the question, will strong Amazon and Apple earnings and a Netflix 10-to-1 stock split resuscitate the bulls? Because I'm going to show you some concerning signs, but maybe, just maybe, this will wake up the market. And what a coincidence, as we're now one trading day away before we end up on Monday with November, a strong month for the markets. Again, my name is Jeffrey Scott. I am the Market MRI Pro at gmail.com. My Google group is called Top Down Trader, and my website is marketmripro.com. As always, this is for educational purposes only. Any recommendations in the spirit of education, not investment advice. I do these videos to show you how I use my tools to do top-down trading. Trading involves risk. You are solely responsible for any decisions you make. I may own, intend to buy or sell any stock I mention. Trading stocks and options should be considered risky. You should consult with your financial advisor before making trades, and I have tools in multiple platforms. My Google group is called Top Down Trader. Welcome you to join. Why would you want to join? Well, you get discounts on my tools, you get invites to private meetings, you'll get my rantings and ravings that I don't put on YouTube. And hey, I'm a nice guy, why not? There's no cost, never will be a cost. And when I do move it to Discord, you'll be the first group to get in. Know your news and earnings. Well, it's what we won't get tomorrow. On Friday, we're due things like PCE complex, things that the Fed pays a lot of attention to. We will get some Fed speakers and maybe some Chicago Business Barometer. And we'll have some earnings, as you can see in the far right. Exxon, Chevron, AbbVie are clearly widely owned names. It is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. We will expect to see another busy week of earnings, I think, at least for the next 2 or 3. So get ready for earnings Lollapalooza 2 starting Monday. For more information about the software product, how I approach the markets, what I do, again, my name is Jeffrey Scott, marketmripro@gmail.com. I'll answer your emails personally. And if you have the program and you're having questions about how to use it, install it, virus issues, coding at marketmripro.com, and let's get going. So I always like to start with the market breadth page, or market breadth and more, the daily briefing. Give me a sense of what the market did. Um, as we could see here, you can see volatility led again. That's never a good thing, finishing at the high. And the dollar was up, finishing at its high. So two things that are bad for the bulls. Diamonds were down 0.31. Russell was down 0.81. Spider was down more than 1%. Qs were down more than 1.5%. And Bitcoin was down 3.75. Now, even worse, as they finished at the bottom of the range, everything from the Russell on down. And the diamonds were much above the bottom. That's a very weak ending. You could see the net high new lows at 52 weeks is negative, and we've got a lot of them. And sometimes when you see that, you see a Hindi. If we look at the breadth, we can see that 39% of the S&P 1500 were up, 35% of the NASDAQ, and 35% of the NYSE. So we had another day of bad breadth. Not a good sign. However, we may see something different tomorrow. One day change, real estate, financials, and healthcare led on the bullish side. To the bearish side, discretionary communications, technology, materials. Clearly rotation, rotation, rotation. But now look at something like tech has only been up 5% in the last month, but the others are actually negative. It's been a rough couple of weeks in the market. If you look at the themes of the day, gold, lithium, genomics, silver, biotech, transportation, and the numbers get pretty small. If you look at what's not working, well, we don't like marijuana when it's at the top. We don't like it at the bottom either. Social media, blockchain, video games, retail, fintech, e-commerce, Jones Internet, Norway, millennials, K-Web. So really a weak market today. I mean, yes, I got some enthusiasm for tomorrow, but this was not a strong showing. If we look at the timing brief, is it enough to change it from a bullish focus? Not really. You have the Russell, um, which closed below the WMA. The bongo's been red, so the Russell daily just gave us a sell signal. You have still a buy here on the diamonds, a buy here on the Qs, and a buy on the spiders, and you're a long way from that WMA. We're not going to hit that tomorrow. And again, with Amazon, Apple, and Netflix acting well after hours, wouldn't you expect the market to be up? So the question is, will we flip the Russell? So on the shortest term time frame that I look at my model, the daily, we are in a rough patch, and we're a little concerned about the Russell. But so far, we have an orderly pullback across the board. Now, if we look at the weekly, you could see everything is still green. So summarize would be intermediate term, bullish. The monthly, long term, bullish. Daily showing some concerns. So this is a beginnings of a pullback in an uptrend. Is this going to be shallow and a 1 or 2 day wonder, or are we going to see something worse? And you can make the argument both sides. I think if Amazon or Apple or both would have missed on earnings, I probably would be a lot less optimistic. On the US index ETFs, and I'm doing this early, so things can always change as the day goes on. Those who watched me probably on Friday or over the weekend, I talked about the high jump went to 100 on the major ETFs. And I said that you pull back from there. Guess what? We pulled back from there. No surprise. And what's really interesting is the seasonality actually predicted a couple of days of weakness before we start to rocket into the end of the year. Well, maybe tomorrow's the last day. Maybe today was the last day of weakness. I don't know. Seasonality becomes our friend. How do you not love this if you're bullish? A beautiful rally off the bottom for the bulls, a true V bottom. Um, and now we're just off all-time highs. Yeah, it was a weak session today, down 1.10, but maybe tomorrow will be different. Um, are we out of danger? No, we're not out of danger. I haven't even gotten to that part of the show. If we look at the Qs, similar story, down day, in kind of a evening star formation. But as I've said off and on for weeks, a pullback to the 17 or a pullback to the 50, frankly, it might be healthy here. Burn off some of the excesses and set us up for a nice year-end rally. So it's not the end of the world. In fact, 595 from 614, that's 19. It's less than 4% away. Am I expecting it? No, not after the earnings tonight, but still a possibility, something that I am aware of. If I look at the diamonds, we'll probably see the same thing. Kind of an ugly day today, but we're about to enter great seasonality. Still in a long-term bull run off of the April lows. What about the Russell? I said that they flipped to a sell signal. But let's talk about them. They just broke their 17. They're still above the 50. They haven't broke their uptrend, and this may just turn out to be one of the very many short-term pullbacks we see as we go into stronger seasonality. We want to look at volatility. Of course, it was probably up today as the markets were down, and we know it is. And you can see VIX futures were up just a bit, 0.24. And if I look at the US dollar, maybe a little bit more concerning. Remember, closing at the high of the day is not great, and it breaking out from this 200. And the question is, how far will it go? Does it run into this level? Does it run, it's already broken out here. So I guess this gap fill, and then you have the gap fill here. I'll keep an eye on the dollar. It's probably not great if it goes up too high and too fast on some equities. If we jump into the commodity report, very quickly, gold and silver both bounced today as equities were weak. Gold was up 1.96. Silver was up 2.59. And I called out yesterday how the run up in gold looks a lot like the run up in the NASDAQ. And I wouldn't be surprised to see a similar pullback And this probably doesn't even go down to the 50 before it heads off to potential new highs or a retest. Oil struggling under the 250 as is natural gas. And then I won't get too depressed about this yet because they're well off their highs, but the 10-year has pulled into the 50 and failed. If it comes back down, boy, that would be great for the bulls. Excuse me, the 30-year yield, not as a bearish looking candle, but still below the 30. And this is the area that I get nervous about, the 5% range. I think there's still some issues around Powell, and he was pretty negative about December. He didn't say no. He just said not guaranteed, and they're going to look at the data, and then he doubled down on it, and I think that spooked a lot of people. If we look at the buckets, get a glass of wine, so I stop coughing. Hey, it's after 5 here. If we look at the buckets, we could see a total shift to the left. You see that as you get weaker and weaker, and when it becomes too much, you rebound. Well, right now we're at 18% below the bands of the NYSE. We are at 13 below the NASDAQ, 16% below the Russell, and 21% below the S&P 1500. Especially that S&P 1500, you're getting at an area where it wouldn't surprise me to see a reversal. In a secular bull market, you get these pullbacks, stock shift to the left with the buildup of the numbers below the Bollinger Bands, and then you get a bounce. And are we setting up for that bounce? Again, I'm cheating. I saw the earnings. I think it's possible, but it can get worse before that happens. Now let's look at the negative stuff. The NYSE has pulled down to the 50. It's bounced here before. So you can see the NYSE pulling in. Very different appearance on the NASDAQ Composite just off its highs. So if the 50 holds, the NYSE is probably going to bounce. Of course it will if it holds. And so if we do get a reversal here, the NYSE just held at that 50. It's very different here. And obviously, if we bounce on the driven by Apple, Netflix, and Amazon, NASDAQ Composite is going to go to another new high. But it's interesting, the NASDAQ Composite is one trading session off of all-time highs. It's important to remember that if I sound too bearish. The stocks above the moving averages, the 20 in green, 50 in white, 200 in red, continue to go down. And look at how they've broken down on the NASDAQ, really at all-time highs. And you could see on Thursday, new high, new lows negative, AD lines negative, up, down volume negative, and we got another Hindenburg Omen. So put that into the uh-oh category. So I think you can now understand my title. We have a major setup here for a big market pullback. A lot of people are calling for it. But if Amazon and Apple are so strong, maybe the market will hold up, especially with the seasonality coming in. If we look at the expanded market breadth tools, um, you know, I look at things to see, are we getting near a reversal? And I look at this line here, which is the 13-week new high, new low. When it gets down to 0.1, I'll get excited. It's heading down, but we're not at a reversal point. Are we starting to turn up on the AD lines in magenta as we with falling prices telling us that maybe there's a reversal coming? Not yet, but maybe we'll see that soon. And then lastly, if I look at the ratio charts, you could see it's still about technology. Now, bad day in the market, so the defensive plays of staples and utilities didn't do so much. Real estate popped up a bit. Sometimes you'll see healthcare pop up as well. Look at how weak discretionary is, how weak communications are, how weak materials are, how weak Bitcoin is. It's a challenging market. But will those earnings make a difference? I hope so, because I still got long positions. And then let's take a look at the JAS layout. Actually, before I do my top down, let's talk about the big guys because they've been important of late. So Apple. Now, Apple looked good going into the print. And as I mentioned, I just went around my ticker. Apple's trading after hours at 280. So that puts Apple up here. Um, Apple is strong. Now, it's going to be at 100% on the high-low jump. So we'll see. It's where it finishes, not where it is after hours. And I've seen plenty of days when the markets pop after hours and they're a lot calmer during the day. Apple looks great here, but it's going to be extended. Amazon did not look great today. Amazon actually had a reversal. And I protected my position with some puts going into earnings. Well, the good news is Amazon right now is up like 25 bucks. Uh, and I think it's about 25 bucks. And I will be more than make up the $2 I've spent on the puts. But Amazon really looking weak here. But I think what we're going to find tomorrow is it's going to give us a nice open, and hopefully it will help us make up for what's going on overall in the market. So Amazon trading in the 250s, so up in this area here. Big breakout for Amazon. Google, this was today's play. Earnings were yesterday, and I think everybody knows their earnings. Look at this, 35% growth. PE of 27. This thing's undervalued with a big surprise on earnings and a surprise on revenue. So great period for Google. Big winner. Meta. Meta disappointed. Why? Because of some of their CapEx exposure. I wonder how long before that turns around. Look at the volume on that sell-off. Microsoft, I own a position in Microsoft. I I did protect myself with some puts and selling calls, and I'll review it on my Saturday earning or option session that I'm holding for the attendees of the meeting this week. So I'll review in detail how I protected Microsoft and what I did on Amazon. But Microsoft, it didn't really move up much. Opened at around 2:30 at 5:30, and then closed at 5:25, traded down to 5:21. So not a great day for Microsoft. I guess it could have been worse. It could have been Meta. Netflix has been the weakest up until Meta's destruction, struggling out to 200. So Netflix today announced one of the old tricks, which is, hey, if you want your stock to pop, do a split. So they're doing a 10-to-1 split. That'll make it much easier to trade, I think, because options become much cheaper. So Meta announcing a split won't be effective for another several days or a week. Nvidia um, has really had a big run of late. Sold off yesterday, and I think there was, or today rather, which was Thursday, and perhaps it was disappointment that the good news out of China didn't really help them. They didn't talk about Blackwell. Palantir, Palantir looks great. It was a lousy day in the U.S. markets, and Palantir had a bit of an inside bar right off the all-time highs. I still like Palantir. As we talked about at the live meeting, um, it's going to have 17 cents here, 1103 versus 10 cents. So that's nice growth. And it's going to have 109 million versus 72. Their CEO was so obnoxious and overtly bullish and making fun of people that didn't believe their story. Boy, will people be making fun of they miss. So I kind of doubt they're going to miss. Hence why I have a position. Then Tesla, which really had a big run up and pausing after a big run, really, I won't say it's broken down here. So you could see in red only Google and Apple up in the market on Thursday, but we might see a lot of strength come into this group tomorrow. What do we got on the top down perspective? So let's just flip over to that. And, I'm tempted not to do a top down today because today was a rotation day. and things like real estate, financials, and healthcare rotated up, and only real estate looked good. But it's pretty likely we're going to see technology and discretionary and maybe communications move tomorrow. How about on the industry groups? Another way of doing top down is just look at the industry groups. All right, here we go. So the big leader was medical distribution, and boy, I'll take a victory lap on that one. How many times do I talk about that group, especially in periods of time of market entropy? So I got the top 10 there. Let's put $5 and 500 share minimums, hit OK. Got 277. Let's put pullbacks and uptrend. I don't know if, well, actually, before I do that, let's look at these stocks. Let's look at return today. So Cardinal Health, not even my favorite of this group, but what a beautiful kind of creating a cup here. Earnings came out, 35% growth, big surprise, big revenue growth, big surprise, well above their multiple. It pays a small dividend. And if you were holding it, you had a really good day. 23 bucks, 25 bucks. What's one of the other ones I talk about in the same group? How about Cencora? COR. The old AmerisourceBergen used to give their CEO a hard time. Who gives up a ticker of ABC? Now, Cencora earnings are not due until November 5th. I would be shocked if they underperform versus Cardinal. A little bit of a closing at the bottom of the range, which I don't like, but look at the strength there. And which one's my favorite as a stock? Not taking sides as a company because I work with all their customers, and that's McKesson, also a bad finish. Now, is that bad finish because the market still up quite a bit? But this is a group I holler and I pound the table on. All I got to do is look at the weekly chart on McKesson. Imagine if you, not that I would have recommended it, you put all your money in McKesson in 21 at $200 and it's 825 a share. I do well in the market, but 400% up in 4 years, not a bad move. Not a bad move whatsoever on the portfolio. All right, what else? Let's go pullbacks and uptrend filter. See if I can thin this down a bit. Let's rank them by up dots. And let's just take a look at the first. This is a takeout candidate. This did something that you don't see that often. You had Pfizer come in to buy it here. Price went up. And then, boom, it popped today because Novo Nordisk came in. CHRW, CF Robinson Worldwide, trucking, it has to be an earnings play. 1029, surprise on earnings, earnings growth. They must have beat some people's opinions. Remember, you can always open up here and increases year over year. That's probably what they're up. But you can click on those links and you can pull up whatever the news source, often seeking alpha, that we're looking at. INSM, again, I saw this one, big pop today. What a beautiful uptrend. Pretty tight. And then broke out. Was it probably earnings? That's what it looks like. Earnings this morning, and the earnings don't even look good. Revenue was a surprise. That maybe that's what drove it. You can always go look at the news, and you could click on the link and watch it. Beats revenue estimates. I guess that's a good thing. All right. EWTX, don't have earnings on it edgewise, don't know anything about this company. Inducement grants, you can read about it. Kind of an interesting pattern, broke out today above the 200. Another biotech company, Moderna making a move, but boy, is this thing in the toilet. So you could certainly go down the list. As I said, there's a lot of healthcare names there, which is great. But I think they're there because they're defensive. They had a decent day, and I'm more interested in what the market looks like tomorrow. Now, I'm also I do top down. That's, I think, the best way to long term make money. But I can't help myself too. So I've built in 2 scans. So let's just take a quick look at some of those stocks. A plus scan. This is my double momentum filtered for a few things like volume. Nobody made it today. That's interesting. Doesn't happen often. How about my A scan, a little bit looser scan? And this one looks for stocks that have the pullback and uptrend, meaning they're in a longer term uptrend. They have a squeeze. They have either momentum or breakout dots. Relative strength has moved up above the moving average, as has OBV. And another healthcare stock, of course, ARVN, another healthcare stock, doesn't look that exciting. Lilly, which you gotta love this company from a fundamental perspective, except you also have to wonder, when does their competition for their Manjaro start to make that a concern about future earnings? And then people, I think they're already discounting it quite a bit, but it has still has a PE forward of 30, but look at its earnings per share growth. How many stocks do you know that have growth rates 29, 60, 494, 111, 1080, 85, 59, and gets a multiple of 30? And I think that's endemic in some of the big pharma where there's lots of concern about government intervention. And in the case of Lilly, what happens when they have real competition besides Novo for their weight loss drugs, which work amazing. Moderna, um, earnings not out to the 6th. Must be some news here. So I flip in here, earnings preview, outperforms broader market, top employer, none of that's good. No idea why they're up today. I could read further. I wouldn't buy them going into earnings. Here's that takeout candidate, and then PBYI is a low-cost biotech with a breast cancer drug that, in my mind, has relatively been a commercial failure. What do they have here? 2 high-flying stocks under 10, hand over fist right now, buy. Wow, that's a pretty aggressive comment. Must have been some news in here. Perhaps they had a recent presentation. I don't follow them, and I would love for them to prove me wrong and that they're a great stock now. It certainly could happen, or a great company. Um, they've been around a long time, have drugs on the market. They have very little revenue. Um, so I want to just draw a trend line here so I know that I looked at it. All right, I could be more exciting, but I can't. I think you've got 2 stories here. You've got a market with horrible breath that inches higher than pulls back, inches higher that pulls back. You've got Hindenburg Omens. You've got leftward shift on the buckets, and you have every reason for this market to implode. And there are many on YouTube and on the internet that are saying the big Armageddon is coming. And then you can balance that by saying, we just had great earnings by 2 of the biggest stocks that people follow. We're about to enter November, and despite all the doom and gloom, we're not that far off of all-time highs. We still have a Fed that's cutting, and I think you're going to have to see what the market looks like tomorrow. I am not overly bearish. I'm not overly bullish. I'm not even confused. But what I am is I see the different stories at play, and I'd rather let they work that self out and then go the way the market goes. So have a great day in the market Friday. Have a great weekend. To my live attendees at my seminar, thanks again, and let's get together as we planned. I sent out the link for Saturday morning, I think 10 to 12 or whatever we finish. If it goes a little longer, that's fine. Michigan doesn't play until nighttime, but I'm not going all day. And we'll review how I use options and as stock replacement, positional options, trying to find those that are low cost, high return. And we'll see you tomorrow. See you soon. Thank you.